Hey all, welcome to ShareTreck. This is Raj here. A special video for you guys today, a surprise for the 4 o'clock time slot. I must confess, I don't know if this has happened to you before, but this morning when I woke up, for some reason I thought it was a Saturday. And therefore I made a Saturday special video and I uploaded it, and I was very happy that I had done my Saturday video and I was going to get ahead with the rest of the day. And then I see my wife telling me that she has got to work today and it's a Friday. So I immediately rushed to the computer and had a look at the markets, and the markets were looking green. I thought, why not just create one more video today and enjoy the positive market that we had for genomics this week. We have not had this kind of stretch of positive days. So let's celebrate it together. Let's get started. Welcome back. Let me start off with the mixed bag of news that I have seen that caught my attention. The first one is Peloton telling its employees that it's going to slash roughly around 780 jobs. So there's quite a few people who are going to lose their jobs. This could also lead to closing of many of its stores and marking up price of some of its equipment in order to recover some margins. And to further save expenses, they are disbanding their delivery system and they are outsourcing the whole thing to a third-party provider. That's the story with Peloton. I think Peloton was hot during COVID lockdown, but now it is just another exercise equipment manufacturer. It had a lot of hype during the COVID lockdown days. So I think I wouldn't invest in Peloton. That's my personal opinion going forward. But there are many other equipment manufacturers who already supply to gyms and all. They have a business model that has helped them throughout before COVID, during COVID, and after COVID. So Peloton needs to find its place. Another company in similar situation is Best Buy. It's my favorite place to be. Whenever I get a time, whenever I get some free time, I just go to Best Buy, the nearest Best Buy, and have a look at all the fancy electronics out there. And sometimes I end up buying some things. But it's a nice store. Best Buy is cutting jobs across the country after warnings of slower sales and cutting its forecast. Many retailers had cut employment to save costs. Walmart comes to mind. So this is not something new. But I think Best Buy is also trying to do an online sales portion of its business, which is also doing pretty well. So I think in the long run, Best Buy would be able to swing back into its stride. It's just that we are going through tough times and the rising interest rates is making it difficult with the inflation and the supply chain issues. Watch out for Best Buy to swing back later on, maybe early next year, maybe second quarter of next year or something like that. Now back to genomics sector, Illumina Q2 results have been a big letdown, and most of you guys know that I have been a big fan of Illumina and Pacific Biosciences. I still think Illumina has a good business model and scalable products to fit all needs. I'll be studying the situation and bring out a video for you shortly. I wouldn't write off Illumina so soon. I think it's a buying opportunity when the Illumina price falls down. Of course, this is not financial advice. This is my personal opinion as a fan of these genomic sequencing companies. Now on to the Fed. Richmond Fed President Thomas Barkin said earlier today that more interest rate increases will be needed to tamp down on inflation. Barkin said he wants to see inflation running around 2% for a period of time. The current level is far from that goal. I mostly agree with this sentiment. I think that we'll likely see a couple of more 75 basis point hikes while inflation starts sliding, as current level of 8% is still too high. However, the Fed will also have to monitor the economic data to make sure that we don't slide into a recession, especially when you start hearing people like Best Buy and Peloton letting go of employees and Walmart also letting go of employees. That's something that we need to keep in mind. Also in the US, we have this commercial real estate, which is also in a weak position. And with more and more companies letting go of people, as well as around 41% of future employees working from home, commercial real estate also is going to be in a soft spot. So we have to keep track of those things. Now let us take a look at genomic shares because that's the favorite part of mine today. I'd like to see all the greens in the genomic stocks. So let's go to the TradingView platform now. Well, here we are in our TradingView platform. I'm looking at Nasdaq futures now. Nasdaq futures have shown a healthy bounce. They are up 1.9%. They have crossed the 200-day exponential moving average. Friends, this is a major milestone because crossing the 200-day exponential moving average is going to lay one more foundation for the bull market to go ahead. Now let us quickly look at the bear market out here, which was demarcated by this diagonal line of resistance, which was earlier red, but now it has become green because it's a line of support now, because we have broken out of that. We came down, we bounced back on top of that, and now we have a new line of support out here, new bullish line of support out here, and we have all the exponential moving average slowly shuffling to get back into the right sequence. I like what I'm seeing here. There's still a little bit more space to be overbought. Now let's go and have a look at the indicators. Let's start off with US oil. US oil has bounced back after pushing through this diagonal line of resistance. This is firmly back into the bearish channel, and when there is a downward movement in price, I think it's going to be difficult for oil to break through, but still it has tried to get through there, and it's in a pennant out here. I would say that it's on a bullish pennant because it's an upward movement on which you're finding this pennant. So the chances are that it's likely to break on the upside, but we still have two resistances out here. One is the horizontal resistance at 95.08. Another is the 200-day exponential moving average, which is sitting at 96.06. And right now we are at 92.00. It's 4 p.m. The markets have just closed on Friday. So we are doing a post-market review out here. The MACD is still bullish, but the momentum is pointed downwards and below average. So there's a good chance that we may slip back into this bearish channel, continue staying in it. But also, according to the technicals, I think there's a good chance that we're going to break out of this. So I'm leaning more towards us breaking out from here and forming a new bull channel, a bear channel, where this diagonal red line of resistance will become the support. That's what I'm expecting as the future for oil. Then let's go and look at QQQ. Again, in QQQ, as you can see, we have broken through our 200-day exponential moving average, and we got stopped by this horizontal line of resistance at 330.05. And right now we are at 330.28 post-market. So we are slightly above that, but I'm thinking that this particular line of resistance is going to constrain us for today. And next week, we'll see what happens. At this point of time, we still have space before we become overbought. MACD is also bullish, so we are looking good out here. S&P 500 is well ahead of the 200-day exponential moving average, and it's approaching the horizontal line of resistance at 429.85, looking perfect. We are overbought here, so we need to moderate a little bit, come down, retest the 200-day exponential moving average, and then bounce back up again in our next attempt to challenge this horizontal line of resistance at 429.85. Post-market, we are at 426.97. Everything is looking good overall. IWM is also overbought on the RSI, so it needs to cool off, and it's above the 200-day exponential moving average. So I think that next week we are likely to test the 200-day exponential moving average and bounce back up again. Dow Jones Industrial Average, absolutely beautiful. It's just become overbought, so there's going to be a bit of moderation. And in all the indices, we are going to see the 200-day exponential moving average providing the support and becoming the launch pad to push us further higher to the next resistance. So that's what I'm expecting out there. Dow Jones Industrial Average looks good. Now VIX has gone down. It is right now at 19.53, ideal for us to do all our swing trading and day trading. So I'm going to happily mark this line of support into a line of resistance. And everything is looking good for further downfall of the VIX. Put call ratio is neutral to bullish. And if you look at XLY by XLP, it's heavily risk on. And we are approaching the 200-day exponential moving average. Will we be able to break it? We'll find that out next week. But right now, everything looks good with plenty of space before we become overbought. So I'm thinking that next week we should be able to break through this 200-day exponential moving average. US dollar index has put on a little bit of steam, but it has been pushed down by the 50-day exponential moving average. And the momentum is still below average, and MACD is bearish. So I think that we are going to just slide back again. And if you look at IWM by S&P 500, you can see that the Russell Index small business is doing better than the S&P 500. Small business usually leads us into recovery in the markets. So I'm really happy about what I'm seeing here, and there is plenty of room for it to be overbought. Overall, I'm happy with the positioning of the market right now. If you look at the established companies in the tech sector which push the index, Amazon has done very well. It has put on 2.07% pre-market. Today before close of market. If you look at Google, it's up 2.36% at the end of the day, and it has converted another resistance into a support at 121.16. I'm going to gladly mark this into a green line of support. Our constraint here is a 200-day exponential moving average. And then if you look at Apple, Apple has put on another 2.15%, and it's very, very strong bullish channel. I'm very much tempted to convert the bullish channel to be something like this with 3 touch points, and that's what I'm going to do. So we have a 3 touch point situation out here, and it's a strong bullish channel. And post market we are down 0.07%. I won't worry too much about it. Microsoft is up 1.70%. Again, it's on a nice bullish channel, and it has plenty of space before it becomes overbought. So overall, I'm happy about the entire market right now. With that said, let us look at crypto, and crypto seems to have got a little bit of a hiccup out here. It has not mirrored Nasdaq entirely. It's kind of consolidating out here, and the momentum is also looking a bit weak. However, it's above average, and MACD is bullish. So I'll hope that during the weekend it continues to try and stay above this diagonal line of support, this diagonal green line, which is the bullish channel for us, and we'll see where it takes us. Next, let's go on to have a look at the commodities. Wheat has increased, and it's going to push inflation up. This is not good. Copper has moderated a little bit. It's I don't think that's going to be a big problem overall. Now let's go on to genomics, and I'm going to just sort this to get the biggest winner up here. Invitae is the biggest winner out here, and it has recovered most of the losses that it had yesterday, and it's still above this line of support as I predicted in the previous video. I think Invitae is a good stock, and there was just a knee-jerk reaction. It's going to challenge 6.15 in the next trading day. And if you look at PSEV, again, it's up 10% as of the end of market today, and post-market it's still up 0.11%, looking mighty good to me out here. There's an overbought situation, so PSEV needs to moderate a little bit before it can go up to challenge the next resistance, which is at 10.37. Let's look at DNA, which is up 6.70%. I haven't seen so much strength in DNA for quite a while. Really impressed with that. And also there's plenty of room before it can become overbought. So next week, see some more movement upwards for DNA. Bluebird is also doing excellent with a gain of 6.5%. I personally have some stake in Bluebird. I'm really happy with the momentum out here. I'm going to convert 6.44 into a line of support for us. And our next line of resistance has pushed us down at 6.86. So post-market, we are flat at this point of time. So I'm very bullish on Bluebird for the next couple of days at least. Teladoc is up 6.13%. Momentum still has got plenty of room before RSI becomes overbought. MACD is bearish, but it's trending towards the signal line. So I think that Teladoc will continue to do well going forward. And looking at Caribou Biosciences up 5.54%, still firmly on the bull track out here, which is this diagonal green line. And MACD has become, MACD still remains bullish, but momentum, RSI is overbought. So I need RSI to drop down and cool off a little bit. So I'm thinking that there's going to be a little bit of testing times for us in this pennant out here. And I'm expecting us to break out on the upper side. But we'll have to wait for the next 2 trading days before those moves happen, because the RSI has to cool down. Verve is up 5.34%, looking absolutely beautiful out here. I'm going to convert this line of resistance at 33.69 into a line of support. MACD is a bit overbought. It needs to cool off, so we look for a bit of moderating in the next trading day. Beam is up 4.5%, looking absolutely beautiful. Plenty of room still for it to before it becomes overbought. And MACD is also turning towards the signal line in a bullish manner. Very happy about it. Allogene is up 4.10 today, still on the bull channel, and the momentum is pretty high. RSI is overbought, so we need a bit of consolidation before we move up any further. And if you look at Pfizer, it's up 3.75%, converting one of these lines of resistance into a support. And there's plenty of momentum to be picked up. We are still below average in momentum. I want it to go above average. Post-market is flat. Edita is up 3.76%, and it's still on the bull channel out here. Very happy about it. Momentum is also pretty decent. And post-market, we are flat. RG is up 3.5%, still on a bullish channel, so very happy about it. Intelia is up 3.26%, and still it's on a bull channel, so I'm happy about it. Momentum still has got plenty of space before it can become overbought. IDNA, which is the generic ETF for the sector, is looking good with a gain of 3.13% today, and plenty of room before RSI can be overbought. IMTX is up 2.45%. IMATX has formed what is called as a bullish rami on the Japanese candlestick pattern, so it's got a good opportunities to move up from here. So I'm happy about that, and the momentum still has plenty of space before it becomes overbought. So still bullish on IMTX. I'll have a separate video on IMTX for you guys. SQZ Biotech is still up 2.10%. And it still has got resistance at 4.01, which is a strong resistance with the 100-day exponential moving average merging into it. Very happy about where SQZ is. CRISPR Therapeutics is up 1.55%, still on a bull channel, not too much worried about it. And if you look at Vertex, it's up 0.8%. Regeneron is up 0.77%. Novartis is up 0.12%. If you look at Illumina, it's up minus 8.4%. And I need to do a little bit of research on Illumina and bring out a video for you guys, because as you know, I have always been bullish on Illumina. That, my friend, brings me to the end of this video today. I hope you have a great weekend. I'll come up with a good video for tomorrow and catch up with you soon. If you like this video, please don't forget to put a like out there. And if you have not yet subscribed, why not? Please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.